This episode is sponsored by Aquanow, the premier crypto as services provider, and sponsored by XDC Network, a layer 1 EVM compatible blockchain, revolutionizing the digital space.
Welcome to the new series of FUMO, Future Money, brought to you in collaboration with Myco. And thank you to our community partners, the MENA Fintech Association, and our knowledge partners, CFT. Nandan, a real pleasure to have you in the studio.
Thanks for having me, Ronit and Gaurav. Thanks.
And this time we're doing it in the studio. Last couple of times we've met, it's been in your boardroom. So it's been a pleasure to, what happens in the boardroom stays in the boardroom, but it's a pleasure to have you in our studio. And Nandan, for the audience who obviously know all about you, but let's give them a little bit of information about you. Who are you?
Okay, that shouldn't take too long. So currently with Network as the CEO. I've been with Network for the last 3.5 years, almost coming up to 4. Time does fly.
Yeah.
But prior to that, Ronit, as you're familiar, I'm an ex-colleague, so I started my journey.
Everyone is an ex-colleague, right?
That is true.
It's
It is a
becoming a
big
theme.
place.
It's a big place, yeah.
No, so I had, after a brief
We
stint,
train the best.
Correct, yes. Hopefully retain the best too.
I just said we train the best.
Oh, boy.
20 years at Citi, right?
Yes. So
Amazing.
20 years at Citi, got my foundation there,
Yeah.
worked in multiple markets,
Yeah.
worked in multiple roles. Great. As you said, you train the best, and that's maybe excludes me, but there's certainly great Citi bankers out there. And so I had the opportunity to work in multiple business lines, retail banking, corporate banking, investment banking, and in multiple geographies. That's the beauty of working at Citi and growing up at Citi. And then I had the pleasure of working at MasterCard for a good decade, based out of New York and Japan. And here I am, saved the best for the last for the Middle East and Africa.
You've worked literally across probably every continent, except for you've done the Americas with New York, Europe, Middle East, Africa, obviously Asia, India. Antarctica's missing?
Well, if they had payment systems there, and if they had banking needs there, who knows? Never say never, right, Ronit?
Well, I mean, Network operates across how many countries in Africa? I mean, just keep going, right?
Yeah.
Hop over from South Africa into Antarctica. But jokes aside, you've had an amazing kind of, both bird's eye, but also ground up, worm's eye view of finance, payments in so many countries. When you sort of step back and, it's been 40 years almost in finance and payments. What are like some of the highlights? And when you started out, how has the world of money and moving money changed in those 40 years?
Yeah, so I'm going to date back to 1987 when I first started this journey. And I'd say that, look, ATMs were new then, as you remember, Ronit, right? Making cash distribution more efficient, making it 24/7. The buzzword was still cash.
That was a big thing, right?
And that was a big thing, right? Even
cash,
being able to access cash at a place of your choice, closer to home, at least, not having to go necessarily to a branch, to an ATM that was more remote to the branch or disassociated from the branch, was a good thing. And that was revolutionary at that stage,
totally.
right? So, what seems revolutionary at a point in time is actually evolutionary when you look at it in the larger context, right?
This thing, right? That we're in we're still in the digital mobile age, right? And when it started, I remember my first kind of value add at the bank was to come out of meetings and call the trading floor on my mobile phone because my managing director didn't have a mobile phone. This is late 90s.
Yeah.
And he didn't know how to use a mobile phone. So that was my job. I had a little Nokia phone and I would call home, call the trading floor.
Wow.
And so when you started out, it was cash, right? So you know this, but the slogan "City Never Sleeps" comes from that.
Correct.
It comes from basically the Frank Sinatra song, because before the ATM, which depending on how you define the ATM, starts in the 1960s. By the late 60s, 69, we have the ATM. Then it spreads across the world. Because before the ATM, the bank goes to sleep, right? You can't get your money out.
Right, and the only thing that you had to spend money on without having access to cash was your American Express or traveler's checks, which were the only substitute in certain
I think
areas,
Visa and
right?
MasterCard were around in the 80s. At least I can speak to the time that I've spent in the industry. Was blissfully unaware of the industry, I have to say, before that. But I mean, to your point, I think cash was one predominantly, or probably the most accepted trend, notwithstanding some level of American Express, Visa, MasterCard payments.
It was all about
but
cash.
it was all about cash, number one. And number two, currencies were printed by governments. Right? So our understanding of what you could exchange value for was a piece of paper, since we're talking about cash, that actually had the name of a venerable central bank in the country from around the world. And that was it. That was our understanding of currency. And look how far we've come, right? People talk about currencies as any stored value in an electronic purse that can be exchanged. So we refer to currency more broadly. And certainly cash is becoming less and less part of our lives. Some of us, I suspect, for the three of us, if we looked at the combined cash in our wallets, we'd probably have less than $100 equivalent, somewhere in that range.
Do you have cash in your wallet?
I don't think I have a wallet.
So there you go.
Exactly.
So let's start there.
He's the young guy in this table, right? So
I still have a wallet.
I have a wallet. Look, I've got an old leather wallet. And oh my God, I have banknotes. I have rupees.
That's because you're a global traveler.
He is a global traveler, right?
Yeah, I have banknotes. Oh my God, I even got Swiss francs. You haven't got a wallet.
Well, it depends where I'm going before I carry my wallet.
So you got a digital wallet.
Yeah, I mean, mostly digital.
You're completely digital. Well, he's wearing the cool Fintech shirt as well. Like, I mean, he's
gone the whole hog.
Everything's
full convert.
He's not a convert. You're a digital native, right?
I am.
That's actually true.
That's
I am.
true.
Yeah, I'm a digital native. That's an accurate way to describe it.
Yeah. So, Nandan, we're in this digital world, but there's still a lot of cash out there. And so where are we in this cash to digital journey? Are we like 95% done? Are we only like half done? Are we just beginning the journey? Where are we in this journey?
Yeah, so let me give you my assessment based on a few metrics that folks like us track from an industry perspective. So there's roughly, give or take, about $40 trillion of global consumer spend.
Okay.
That's a number that you will see in several surveys.
Yeah.
It could be
give or
high,
take,
low, how these things
same
work.
ballpark,
Right, same ballpark.
Yeah.
And the estimate is that roughly we're about at a quarter of that from a digital expense standpoint. And that varies across the world, as you know, Ronit. You're a global citizen. So you go up to the Nordics, and I'm sure you see much less cash than electronic payments. And that's because the infrastructure exists for acceptance. So you need to have acceptance infrastructure for even financial inclusion to be put to work, right? Yeah. And so the acceptance is near ubiquitous. And not just in the Nordic countries, but the Nordic countries got there first. And so human behavior has caught up with the infrastructure. And I'd say in the Nordic countries, you're probably looking at a mid-70s in terms of proportion of digital spend versus non-digital spend. That's, again, estimates based on whatever local measurement firms. And then at the other extreme, you've got many developing markets, some in Asia, some in South America, predominantly in Africa, where I would say that the journey has only just begun. So you're looking at, you could be in some markets, or some geographies, you could be looking at digital spend as low as low single digits.
Wow.
Right? So, and that's also because the infrastructure doesn't exist. If you have for every million sellers of goods and services, if you're going to have 1,000 or 1,500 digital acceptance points, call them whatever, soft POS is a technical term in our industry, or even the regular point of sale terminals, you're just not going to get the digital spend because the ability to enable that digital spend doesn't exist. And so there's a lot of markets where we still have a lot of work to do to create the infrastructure for then financial inclusion to take its full course. And for folks that even have digital stores of value either in their phone, as many do in Africa, or in bank wallets or in non-bank wallets, for those wallets to then be accepted in exchange for goods and services.
It's interesting how in many parts of the world, say outside Scandinavia, we're still so early in this journey. So let's double click on the GCC. Gaurav, do you want to dive in there?
Oh, I'd love to, because, pulling a thread from where you were just talking about it, certain markets have leapfrog moments. So in China, you had QR code, and now you have facial recognition technology because they have the infrastructure, right? Just as you said very correctly. And in India, They have Aadhaar and UPI, which enabled it. But like you said, Ronit, let's talk about the GCC for a moment. A lot of our listeners and entrepreneurs are here in the region. And you've been here for 3 years, right? Almost four with Network. And over that last 4 years, I'm sure a lot has changed. And you've been making that change at Network yourself. Whilst payments has become standardized as a product offering in the market, what have you seen yourself as some trends? What are the trends you're seeing in the last 2-3 years apart from payments that's taking place in this region along with Network?
Sure. So again, you're referring to the GCC, so I'll start there.
Please, yeah.
I'd say the GCC has actually made a lot of progress in the last decade or so. Certainly predates the 4 years lens that I have, because when I got here, I saw that the GCC was already reaching an inflection point where you could see a world where digital payments would be a greater proportion to total payments than cash. It didn't start from then. Many GCC markets are still, cash is still predominant. But let's talk about Saudi Arabia and UAE, which are at the forefront of this conversion from cash to a cashless or less cash economy, as it's now called more popularly. Saudi Arabia, let's take that as an example, has moved from, I'm going to say, roughly 20% digital payments in exchange for goods and services to closer to 60% now.
Wow.
And that's happened in the space of 5 to 6 years.
Wow.
And there have been many enablers, and those enablers actually are in place in many GCC markets. Maybe we talk a bit about the UAE, where a lot is happening. As you know, the UAE is launching a couple of programs that will be significant accelerators in that shift. We can come back to that. But that storybook or that playbook has already been used in Saudi Arabia. So the Central Bank of Saudi Arabia created Saudi Payments. And Saudi Payments then invested heavily in infrastructure to connect the various flows, right? Because a digital currency is only a type of flow within a pipe, but you still need the pipes and you need the end connectivity of the pipes. And that's an infrastructure play. That's a financial infrastructure play. And financial infrastructure, while a lot of companies get at it and do it, but there's nobody like a central authority to put that financial infrastructure in place. It could be any government authority. It doesn't have to be the central bank. It can be the central bank, but the central bank in Saudi Arabia took the lead. And they did a fabulous job of creating, through Saudi Payments, a set of endpoints as well as the pipes for then the transactions to flow. And they've spent a considerable amount of time, money, effort in building that technology base, the infrastructure base. And now we're seeing the benefits of that. So I'm sure both of you travel to Saudi Arabia. You can now pay for a 1 riyal coffee in the remotest parts of Saudi Arabia with any store of value, because all stores of value are going through a single channel, which is created by Mada. The brand name for the channel is Mada. And so everybody gets onto a single rail. It doesn't matter where you're originating the transaction from and where it's terminating. And 96-97% of transactions in any country tend to be local. So having a single set of rails is very helpful for a country, because there will always be differences in origination points. You'll have bank wallets, you'll have you'll have life stage wallets, super wallets, you'll have whatever. You'll have telco wallets, bank accounts, credit cards, fintechs solving for problems that haven't been solved yet. And so there's a very vibrant ecosystem at both ends of the pipe that needs to be connected from a cross-rails perspective. And so having done that now, I think we're seeing that close to 70% of, I'd say it's in the high 60s, could be touching 70% of consumer spend in Saudi Arabia is now happening through exchange of value through a digital store of value for either physical goods or for digital goods. So that's at the forefront of the change that we're seeing. The similar things are happening right here in the UAE. So the central bank in the UAE has created a payment subsidiary called Al Ittihad Payments, which I think at least those who are in the industry have certainly heard of, and many of us are working with. We're partnering with them. And they're rapidly putting into place this financial infrastructure through 2 tracks. One is called ANI, branded ANI, which is a bank-to-bank transfer facilitation service. But ANI can now also be used at point of sale. It will soon be available for e-commerce transactions, but it's already available. At least I can speak for networks, point of sale infrastructure. Ani is already accepted across our infrastructure across the UAE, and I'm pretty sure it'll be available at our competitors' infrastructure too shortly.
I think it sounds like Venmo, but government-enabled Venmo, P2P almost, bank to bank, almost payments.
Yeah, it's actually an in-app payments. You can do bank-to-bank transfers.
Wow.
Obviously, you can do P2P payments based on email and telephone number,
which wasn't available so easily before.
Correct. So it's a very robust infrastructure. It's instantaneous. So it's highly gratifying. So the thing is that for electronic payments, to replace cash, it has to follow the attributes of cash. It has to be instant, the gratification, the exchange of value, because that's how you build trust between buyer and seller, right?
Absolutely.
And that trust is built through that instant completion of the transaction, handover of the goods and the handover of value in exchange for the goods. And so that infrastructure is there in the form of Ani. There is another infrastructure that the central bank in the UAE is putting together through, again, Al Atiyat Payments, which is branded J1. It's the national payment card. And again, the advantage of that means that essentially anybody who wants to tokenize what we fondly call PAN, a personal account number, that is your definition of, let's call it, a store of value. It's it's a numerical. And these things tend to be encrypted and stored electronically, can create that and use a singular rail, the J1 rail, again, to exchange value between buyers and sellers and consumer. So, the future is bright. And I I know that this will definitely help accelerate the shift from cash to electronic payments.
It's so interesting having been born in the UAE and studied all over the world. It's super interesting to see how technology adoption in other markets, which we can say are more fintech mature, for lack of any other verbiage at this point in time, gives the UAE and Saudi Arabia, just what you've described, a great viewpoint and a landscape to see what works effectively and contextualize it to their own geography in adopting it. So a bit of UPI, a bit of rails, domestic rails issuing from India, from China, seeing where leapfrogging technology, wallet infrastructure from say Africa, which works very well. It seems like they've taken inspiration and learnings from a lot of other economies which have tried to grow the market from a protection point of view and enablement for consumers and merchants alike in infrastructure. And it seems like it's given this growth, since payments has become very accelerated and still growing to a large extent in a lot of ways. What are the other trends that you're seeing in terms of either technology or types of fintech businesses that are coming up or enabled around this infrastructure adjacent to payments? Are you seeing anything else that you're noticing or working with?
Sure, there's a lot of action.
Are you doing things yourself, or you're enabling people to do it through partnerships? What's your take on that?
So I'll take a step back. We have been a partnership-led company. So, payments is such a broad and deep space. I'd say it's almost impossible, never say never, but it's almost impossible for any one firm to grasp the nuances of all the payment technologies that are out there. And of course, the flows that these payment technologies enable, because there's B2B payments, there's P2P payments, government to consumer.
Like Stripe is trying to do,
there's a whole bunch
or
of
others,
things
right?
happening, right? There's a lot of flows.
Yes.
It's not just the consumer flows of 40 trillion, and then you add hundreds of trillions. Again, these numbers are, they're massive, of B2B flows, right? That exist out there. So, and there's a lot of solutions. I think your question had maybe 2 or 3 parts to it. The part where, you're asking what's happening. There's a lot of companies out there, thanks to open banking, thanks to advances in technology, and therefore reduced cost of entry from a technological space into solving problems that haven't been solved. The whole point of the fintech, I'm going to say, revolution, if it's not an evolution, it's way past that evolutionary stage, is that these fintechs are actually taking, I'm going to say, problems that haven't been solved and are going deep in terms of solving them, right? They're vertically integrating with several participants in the ecosystem, and for companies like ours, but also companies that are solving problems that are real, where connecting, counterparties, etc. that haven't been solved before. They're leaning on companies like ours, which provide payment technology capabilities. They're leaning on banks through open banking infrastructure and banking as a service infrastructure to then use the KYC, the AML, the know your customer, anti-money laundering capabilities of banks so that they don't have to reinvent that. And then they're focusing on improving the customer experience and the user interface. And so that's sort of a revolution that's happening in the fintech world. Banks are also stepping out of their comfort zone. We know that, I mean, everybody from the large banks like Citi and Bank of America to local banks, regional banks, are all stepping out of their comfort zone and also expanding their suite of capabilities in partnership with fintechs, but also developing some on their own. So I think we've all come to the realization that you can't build for everything. You're going to have to partner in many, many areas because you're serving such a wide ecosystem, irrespective of where you sit, whether you're a bank or you're a payment technology infrastructure company, et cetera, et cetera. And for some of us, we're also in multiple markets. You can't grasp all the changes, and you can't stay ahead of the curve of all the changes that are happening if you're not partnering with local ecosystem players, right? And with local banks. That's the whole point of having banks in the market. So I think partnerships is a very key aspect of how we do business. And I'd go a step further and say we even partner with our competitors because there is always value to be created, even because two competitors could have different sets of capabilities.
Like you're doing it with Adyen and other people.
Exactly.
Right?
Adyen is one example.
Frenemies. That's a great word.
Stripe is another example, and the list goes on.
Right.
There are other payment companies from around the world. We are partners with Citi. We help Citi provide last mile solutions in our region. We help JP Morgan Chase provide last mile solutions.
Wow.
So they're not technically competitors because we don't operate in their geographies, but we collaborate with folks in our industry, and we also collaborate with folks outside our industry. And that's not limited to technology partners. It could be limited to capability sets that we just don't see ourselves as being good at building, even if we tried to do so.
Nandan, you operate or network operates in so many markets. I think many of the listeners will probably, I mean, if they're based in Dubai, they know about the UAE or the Abu Dhabi, or if they're in Egypt, can you remind the audience just how many countries you operate in and how many in the GCC or the Middle East, how many in Africa? Because I think it's a mind-blowing number.
It's a nice number. There are companies that serve more markets, including Citi, but we're in 50 markets.
50. Wow.
Yeah,
50.
and 50,
Out
of
Dubai.
which 40 are in Africa, give or take, and roughly 10 in the Middle East.
Yeah.
Obviously, we serve these 50 markets through hubs. So our hubs are right here in Dubai.
Yeah.
And then we have a hub in Riyadh. We have a hub which serves obviously Saudi, which is a very large market for us. We have a Levant hub in Amman.
Yeah.
We have a North Africa. Actually, we have a North Africa hub in Cairo, a Francophone hub in Casablanca,
Right.
an East Africa hub in Kenya, a West Africa hub in Lagos,
Right.
and a dual South Africa hub, one in Joburg and one in Cape Town. I hope that answers your question.
You asked for it.
I did, yeah. I think it's often, I mean, with big international names, particularly the MasterCards, Visa, everyone knows.
This is homegrown.
A couple of hundred countries, but this is actually an amazing number of countries.
Yeah.
I mean, it helps Africa has 54, but still
But from UAE, day
But
one.
we are a homegrown
Yeah.
company.
Yeah.
30 years in the business.
Yeah.
Started, right here in
Yeah,
Dubai.
we've been working with you
in the
guys since
UAE.
day one. Yeah, lucky, yeah.
Maybe I could ask a more personal question from a management, like being a manager and a leader. Of course, you've had this experience of working in many countries, but in this footprint of 50 countries, how do you have to tailor your style or your approach when you're dealing with partners or clients or even staff? What's it like?
Yeah. So I'd say there are similarities and there are obviously differences. You've alluded to the differences. But if you don't mind, I'll start with the similarities.
Yeah.
So we hold the glue through purpose and values, right? So we define our purpose as helping companies and economies grow by simplifying commerce and payments. So that then unites 2,500 people in the firm, irrespective of where you work, because we have our offices in some parts of Africa are actually 2 people strong, 4 people strong.
Right.
And they have to have a connect with head office and with their local hub. And so we established that connect through our purpose. That also defines how we approach things.
Yeah.
And then, of course, there are the values that every company has. We certainly have our own set of values, which then define how we're going to do business in any one of these markets. And then I have to say, we operate on the credo of two credos that fundamentally define how we approach business. One is payments is a local business. Back to the 5+% of all transactions originate and complete in a market. So you have to be locally guided.
Yeah.
You cannot approach things from a central perspective. There will be a lot of similarities in terms of how you build the tech, but it has to be fit for purpose for each one of these markets. And I can say this with relative sense of confidence that what the tech that you develop for one West African market may not be good or relevant for the neighboring West African market.
Absolutely correct.
And that applies to East Africa, South Africa, et cetera, even the GCC. So any microcosm that you think is more similar than different, I can say with relative confidence that everybody has their own sense of how to get things done and how the rails operate. So you have to operate, you can't swim against the tide. You may not swim in the right direction, but you got to stay with the tide. And then enable the water or the flows to be better. So that's one. And two, I think culturally, you were heading down, your question was in that direction too. You have to be very culturally nuanced to how things get done in every market. The decision-making process is not going to be the same. The timelines for decisions are not going to be the same that are made. You could
just leave it at that.
You could be having the same conversation with regulators or counterparties or customers in 3 different markets. They could start at the same time. And they may not end at the same time, right? So you just got to be patient. You can't hold the prism of one market or another market. Otherwise, you're also in for a series of disappointments. Number one. And number two, you could end up doing the wrong things and hurting the firm or hurting shareholder interests or even employee interests, right? Our colleagues. So I think we just have to keep remembering as any global firm that we are actually a collection of businesses that are built grounds up.
Absolutely. Running out of time,
Gaurav. We are, unfortunately. So, we might have to do a part 2 on this. Nandan, there's a lot more to ask you in terms of what you guys are doing and heading to, and I think the audience would be especially interested too. But thank you.
What's next for Nandan and Network?
Well, Network is going to keep doing what it does, which is, I talked about the purpose, so I won't repeat it, but we're in the business of building techs to enable banks to serve more consumers. We're currently serving 20 million consumers, and we hope to serve, we've got an order book that's roughly 200 million more credentials that we're adding. So we're pleased with that, but there's 1 billion people in the region we serve. So a long way to go there. We talked about building the infrastructure. We serve 130,000 merchants. There's over 100 million sellers of goods or services in the Middle East and Africa. And if we can get to 1 million, our next goalpost or our next, let's call it signpost, not goalpost, threshold that we want to cross is to be able to serve 1 million sellers of goods and services. So we'll keep on that journey.
Certainly going to be an exciting couple of years ahead, I'm sure.
Absolutely.
Nandan, thank you so much for joining us.
Absolutely.
Thank you for having me.
It's been a pleasure.
Likewise.